Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to share something with you that I have always found kind of a foundation of options trading, and one of the things that I really try to keep in focus as I go about my trading, and that is to just kind of keep fear a good, 2 arms length away, or whatever you want to call it, because one of the biggest things that you'll run into is that when things happen like what we've seen this week, it tends to drive implied volatility higher, or it tends to drive uncertainty higher, which is understandable. But as we go into this, and one of the things that always made the sharpest realization to me is when I look at the spiders and I say, well, we've come down into the 200-day moving average, kind of a tricky spot to, really want to get short. But we haven't seen much in the way of a bounce yet either. This is where the concept of selling premium really shines through best. If you look at the November series, which will finally get us past and out through the election, look at the concept of coming in, and I'm not saying to do this trade necessarily, but just understand the idea that when you're looking at this particular series, and if we were to sell what is pretty close to being the at-the-money straddle right now, that's going to go for close to $8. Maybe even a little bit better. Okay, so the markets are closed and it's giving you an $8 credit. What that is essentially saying is that if you were to sell that, you're looking at the idea that the market stays above 200 and below roughly about this 216 area into that particular expiration. And that's where, to me, it makes so much more sense to be willing to sell those contracts as opposed to trying to buy something like that looking for a big move. Who knows what's going to happen? But even if you did know for a fact who was going to win the election, I don't think you could say for certain what exactly is going to happen to the market. So try to, number one, release your emotions around who may win, and number two, define your risk based straight up off the spread. One other place to look at this, because I was noticing that JP Morgan was in another squeeze, and the last time we looked at JP Morgan, we had a very nice squeeze to the upside. So of course I'm wondering if this is going to happen again. Well, a couple of ways to look at that. One, you can come in and run symmetry on this individual chart, which will give you support just a little bit lower, but then also keep an eye on the financial ETF into next week. If something about this is going to break down and the market's going to have a bigger problem, I would expect to see it start breaking symmetry of these most recent declines in XLF. As of now, those moving averages are still holding, symmetry is still holding, and I'm going to continue to try and err on the side of trend, sell high IV rankings, and try to sift through this, rather uncertain election. So, I hope you find that helpful. If there's anything else I can do for you, please let me know. Remember that we do have that election course that is coming up on Tuesday. So that's coming up on next Tuesday, if that's something that you are interested in. I know I'm looking forward to hearing from John and a good portion of the rest of the team. I definitely don't think it will be dull, especially from a futures perspective. So if that's something you're interested in, I hope to see you there, and we'll revisit the rest of these ideas in the next free video.